So let's talk to Jonathan Davis. He's a Hertfordshire-based wealth manager. Jonathan, first of all, should I be worried?
And
be gentle. Be gentle.
You sound a little bit worried from the financial point of view. Listeners should always remember that there are different reasons to buy or not to buy. And everyone, 98% of folk just naturally assume, admittedly based on the last generation or two, that it's impossible that house prices could ever fall sustainably. Well, first of all, there's no such thing in markets, financial markets, as impossible. Should you be worried? Well, you should only be worried if you are one of those who believes that by being out of the market, you're missing out on capital gains. I would take the position that after a generation or two of falling interest rates and therefore mortgage rates, and we're now at rock bottom, 1 or 2% mortgage rates, I would argue that they aren't going to go down anymore after having gone down 40-odd years. Therefore, it suggests to me that potentially over the next 10 or 20 years, they could rise. And if mortgage rates rise for a long term, I'm not saying they will, I'm saying there's a risk that they will, then I would suggest to you that not being in property is not a risk.
Well, I'm feeling a little bit better about myself. What about, if I'm honest, I'm the sort of person who hasn't ever been that concerned by the financial thing. As I said, I had a friend once who had a couple of children, so he was quite rightly concerned that from a financial point of view, if he was to pass early, then they would need a little bit of a nest egg and some financial support that they'd have got from sort of the property that he was owning. But I do, if I'm honest, I am concerned about being viewed as a failure and a disappointment to people, and that my status and my social standing, if I want to date, would people being put off, me being a 38-year-old who's not on the ladder. What do you think about all of that stuff?
It's certainly the case that people look askance at, if I may say, middle-aged professionals.
You're okay. You had me at the word professional. I'm fine.
Who haven't got a mortgage. I'm loath to say are homeowners, because owning 10 or 20% of a home does not make you a homeowner. It makes you a part owner. Yes, dates will look askance, but frankly, anyone who looks down on a person who's renting for very good reasons, that's not a person that personally I'd want to date.
And if you turn it around, I do not have a massive debt from trying to get on the property ladder and that going wrong. I'm a solvent man. I've got some savings in the bank, so it's not all bad, I hope.
Well, of course it's not. The fact is, over the next 10 years, over the next 20 years, people have to accept that it's at least plausible that if interest rates fell for 40-odd years, which they did, then it's plausible that interest rates could rise from, the base rate is 0.5%. We had the great crash in 2008, and the government and the Bank of England slashed the base rate and therefore mortgage rates from 5% to 0.5%, and in effect they've stayed there for the last 9 years. People don't realise, but in 2008, in the crash, house prices fell 20 to 25%. Now, you just have to go to the land registry and you see that as a fact. And house prices have risen more or less for the last several years. I would say largely due to the Help to Buy scheme, because up till 2013, the banks and building societies pretty well stopped lending above 75% loan to value. So that's why the government brought in Help to Buy. Now, what's interesting is the two Help to Buy schemes, one of them the government has already discontinued, the other one still continues for brand new properties. But we no longer have the boost from Help to Buy. We no longer have the boost to prices from falling interest rates, because I say they've stayed there for the last 9 years, and I would suggest to you there's probably only one direction they can go, and that's up. And overall, when you think about all the tailwinds that we've had for 40-odd years, some of them are now headwinds. Finally, buy-to-let, that was a huge growth in prices, huge growth in demand since 1998. That is actually now going the other way. There are more people getting out of buy-to-let now than going in. So lots of headwinds now, and it's potential they're going to be there for a long time.
Jonathan, we've had a text through from Jackie in Watford this afternoon saying, because my big issue has been, without having a partner in my life, I don't feel I can do this. But she's made an interesting suggestion. What about doing something like this with a friend? You could have 2 bedrooms and 2 en suites, start small with a flat. The sooner you start, the sooner you finish. And she makes a very good point about the fact that when I'm a pensioner, I'll not have to pay any rent and we'll be able to enjoy life more. And I suppose if we're looking at it, the bigger picture, if you're renting, you do still have to work for a lot longer, maybe.
Well, there's a couple of points there, and also relating to something you said earlier about leaving something to your kids. First of all, you don't have to take out a mortgage to build something for your retirement. You can put away 50, 100, 150 pounds a month, depending upon your wherewithal. And in 25 years, with a bit of growth, you'd be surprised how much you would accumulate. So you don't actually have to take on debt to do the sort of thing you're saying. Secondly, in order to leave something to your kids, should something happen to you, there is a simple thing called life assurance. So again, people focus on this house purchase thing as the be-all and end-all. There are other simple alternatives.
Well, I'm relieved to hear that, Jonathan, I've got to say. So if there are people out there who haven't managed to kind of elude their fears this afternoon, what should they do? Is there like a sort of a baby step to get onto that ladder?
Well, again, 2 points. One, you guys in the media, you call it the ladder. It has certainly been a ladder for 40-odd years. People should be concerned, should bear in mind the potential risk that interest rates rise for a long time. Then it's no longer going to be a ladder. It's going to be a snake. And secondly, if you want to be building something, why don't you just start building a savings plan through an ISA, a lifetime ISA, individual savings account. You can save into that on a tax-free basis, and you can actually use that with a bonus from the government to buy your first property down a few years down the line. So an LISA could be a good savings plan for younger folk.
Jonathan, kudos for using the word housing snake. If you could see the look on my producer's face, he's not a happy man. He's clearly not played many board games in his life, but I think it's a great thing to say.
Well, there you go. One tries.
And we appreciate your time this afternoon. That's Jonathan Davis trying to elude my fears, and I think we're on the way to doing so. Jonathan Davis is a Hertfordshire-based wealth manager.